This is Scott Becker with the Becker Private Equity and Business Podcast. These are two private equity stories that we're following. We hope you enjoy these. Again, at the Becker Private Equity and Business Podcast, we cover business subjects, private equity subjects. We do it in a very concise way. The only thing you'll hear that's much longer are the interviews we do with people, and even those are typically 10 to 30 minutes, not much longer than that. Anyways, two private equity stories we're following. First, Senators Edward Markey and Elizabeth Warren introduced a bill to criminalize private equity looting of healthcare. Again, the bill's not particularly well put together, but it sort of does point to the constant target that healthcare private equity has on it, at least currently. Now, Senators Markey and Warren are both from the state of Massachusetts, where Steward Healthcare, which largely fell apart, had a lot of their assets, a lot of their hospitals, so they're particularly focused on this issue. The bill's horribly written. It doesn't have much chance of passing, but it is fascinating to see the target and the drama around healthcare and private equity, or private equity and healthcare. So that's that story. I don't expect this bill to go very far, but it is signaling this concern about healthcare and private equity. And again, Elizabeth Warren's one of the most progressive senators out there, one of the most anti-business one, so you sort of expect this from her. Markey's not quite as farly progressive and left on these issues, but private equity's got a bit of a target on it. The second story that we're following closely, and I find this fascinating, is the debate over private credit. The private credit business has ballooned. It's gone from like $40 billion 20 years ago to now a $2 trillion business almost. And you've got different positions in this. The huge bank leadership, Jamie Dimon particularly, saying that private credit has systematic dangers and concerns to the economy. The people that are in the private credit business, no surprise, say it differently. They think essentially that it adds less risk because you don't have so much money tied around big, huge banks that are too big to fail. But Apollo Credit or Apollo Capital, as well as Blackstone, speaking out in favor of the private credit industry, whereas the big banks speaking out against. The big banks would say, look, we've got all these reserve requirements. These private credit funds don't have a lot of that stuff. It seems unfair, and it seems, it seems that there's more risk that the private credit people would say they've got long-term investors where the bank deposits can leave every day, leave the bank sort of upside down with a run on their deposits while they're trying to continue to have these loans outstanding. So fascinating debate on private credit, the growth of private credit. But one thing's for sure, the industry is growing like crazy. And in fact, last year had better results or returns than the private equity business, meaning the private credit business did better than private equity last year. And anyway, those are two of the stories we're following in private equity. Thank you for listening to the Becker's Healthcare Podcast. Thank you to Cosette Benjamin, one of our researchers, just a fantastic researcher, brilliant person. And also thank you to Chanel Bunger, our fantastic producer. Couldn't do it without her, the best in the business. Thank you very much, Chanel and Cosette. Thank you.